Good morning.
We are witnessing significant developments in transaction banking. We would like to hear from you on this.
Transaction banking has been an enabler now with so much diversity taking place. Regulators are redefining the investment banks and universal banks. The commercial and corporate banking model has been confined to now with a linchpin called transaction banking. Cash management systems, trade, and again supply chain financing are all integral part of the overall financing needs. And these transaction banking has to be clearly a consultative model, and also it has got a fee generating opportunity with the customers. So you are not going to sell products. What you are going to do is to create a financial plan for the customer. You are also going to create liquidity for the customer. You are also going to make sure you become a project advisory if there is long-term investments in business plans, or if it is a trading institutions, you are also going to advise them how to import or export and what are the various optional models we have in terms of foreign exchange management, including customer advisory for rationalization in terms of overall financing cost. So it's a good evolving model and a fine combination for the days to come.
After the insights on transaction banking, what are the main objectives of transaction banking?
Objective is to rationalize the financial plans, improve the liquidity, improve the profitability, improve the synergistic opportunity between trade, liquidity, and supply chain financing.
Again, can you please highlight us the importance of transaction banking?
Importance is the changing dynamics of the market space. Today, we live in an interconnected world, and global financial market is going through huge volatility. The cost of financing should be minimal. Transaction cost should be minimal for any type of industry, and operating cash flow should be driven with a lot of value chain. And if that's the case, so you need to understand the dynamics of the trade. So recognizing the trade import-export breakups, intelligence of those analytics, and ensuring how to book a forward cover, ensuring foreign exchange cost is minimum. Also financing for supply chain so that you can rationalize the credit plans and also improve the liquidity. And the last but not the least is to do complete cash management so that the overall financing needs are moderated, cost is minimized, and again the overall profitability comes in.
What are the trends in transaction banking as a whole in GCC?
It's moving in the right direction. If you look at the bigger picture, the contract financing is happening, the trade is improving, the banks are geared up for huge financing needs. Now, the market opportunity is to go and understand the business model in the GCC. If you look at, by and large, with the government expenditure driving the project space, contract space, every single market is now poised for a huge amount of import, and import financing is a need. Again, corporate commercial banking is a need, and advisory is a need. How to integrate all these informations and improve the liquidity. That's what is happening in UAE, that's what is happening in Saudi in a large scale, and Kuwait is going to have huge opportunity for transaction base. When it comes to Qatar, you have more and more project space. Over 205 billion has been committed for government expenditure. That's going to give a good flow of collaborations, project advisory, factoring, receivable management, and again ensuring bill discounting comes in, and restructuring of the debt within the frame to improve the liquidity are all integral. So there's a fee income attached to it, and the entire Gulf is can run a successful transaction banking model.
Moving finally, the challenges in transaction banking.
The challenges are few, but it's important. We don't have integrated system for as a cohesive business process. We need to develop that. It means you need to customize your solutions in terms of system management, and we also have no incentive plans. You have to agree on transaction bankers or the investment bank type model of agreed on incentives to promote transaction banking. And we also have, it is not just a simple product for a fixed price, since it involves huge amount of intellectual integration within the corporate management of lending or finance. You need to set in internal process which are quick disposal of customer turnaround time, and also products which are going to improve the overall global trade support. And collection and clearing has to be in a fast track, and improving the liquidity for the customer is important. So you need to have a clear cash management systems to support the overall transaction banking. Those are the challenges we are facing, and skill base is very limited more than anything else. So you need core bankers who can sell not products but solutions.
Thank you, Dr. Seetharaman, for being with us.
Thank you.